This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
TradeFlow Capital Management celebrates 5 years of strong returns and SME success. To find out more, please visit www.tradeflow.capital.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Oil prices settled lower on Friday as European banking shares fell and after U.S. Energy Secretary Jennifer Granholm said refilling the country's Strategic Petroleum Reserve, SPR, may take several years, dampening demand prospects. Brent crude settled down 92 cents, or 1.2%, to $74.99. West Texas Intermediate U.S. crude futures fell 70 cents, or 1%, to $69.26 a barrel. Both benchmarks rose this week as banking sector turmoil eased. Brent futures rose 2.8% in the week while U.S. crude futures rose 3.8%. Last week, both benchmarks posted their biggest declines in months.
Russia is very close to achieving its target of cutting crude oil output by 500,000 barrels per day, BPD, to around 9.5 million barrels of oil per day, Deputy Prime Minister Alexander Novak said on Friday. RIA Novosti news agency reported on Thursday that the cut would be from an output level of 10.2 million barrels of oil per day in February. But in a statement, Novak's office said there had been many misinterpretations of the actual plan for the cuts, which were announced in February.
Moving on to the top news in the energy sector.
Boosting German power transmission lines to accommodate a shift to zero-carbon generation industry will require 14,197 kilometers, 8,821.61 miles, of new networks costing billions of euros, the country's high-voltage grid firms, TSOs, said on Friday. A rolling development plan presented for public consultation by the four companies calls for additional investments of €128.3 billion, $137.72 billion, from now up to 2045. Completion of some may need to be brought forward to 2037. The total sum was broken down into €41.6 billion for onshore and €86.7 billion for offshore measures.
China will extend some preferential tax policies and continue to implement zero tariffs on coal imports until the end of this year, state media CCTV reported on Friday, citing a cabinet meeting chaired by Premier Li Qiang on the same day. China cut tariffs on coal to zero in April last year in the face of concerns over domestic energy security and supply disruptions. The country's coal imports in the first 2 months of this year surged 71% from the same period last year, as utilities stepped up purchases of cheap thermal coal from Indonesia while arrivals from Mongolia also picked up after the easing of COVID-19 restrictions.
Next, we have the top news in metal markets.
China has raised the first batch of its 2023 rare earths quotas, with the mining output quota increased by 19% from last year to 120,000 tons, the country's Ministry of Industry and Information Technology said on Friday. The ministry also set the smelting and separation quota for rare earths at 115,000 tons, an increase of 18% from last year. Producers are not allowed to exceed quotas because rare earths are state-controlled resources, the ministry said. China is the world's top producer of rare earths.
Most of the roughly 2.5 tons of natural uranium ore concentrate, UOC, recently declared missing from a site in Libya have been found at that site, the UN nuclear watchdog told member states on Friday in a statement seen by Reuters. The International Atomic Energy Agency informed member states in a similar confidential statement on March 15, first reported by Reuters that 10 drums containing the UOC had gone missing from a Libyan site not under government control. While the amount of fissile material is less than that required for a nuclear bomb, and would need to go through processes known as conversion and enrichment to be usable in one, the IAEA said at the time that losing it may present a radiological risk, as well as nuclear security concerns. We will now look at the top news in the agricultural sector. Falling prices have sparked a flurry of Chinese purchases of U.S. corn, as the world's top buyer of the grain scrambles to make up for a slow start to its import program, traders and analysts said. The latest deal, announced by the U.S. Department of Agriculture on Friday, saw China buying 204,000 tons of American corn, its eighth confirmed purchase in the past 9 business days. U.S. corn futures fell 7.3% during February and hit a 7-month low on March 10, before China began its buying spree. The price drop, combined with uncertainty about exports from rival supplier Ukraine and improved shipping conditions along the Mississippi River, made U.S. supplies the most attractive to Chinese buyers.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.